and welcome to 3.0 TV. I am Ruchi Sharma. Michael Saylor's strategy has purchased an additional 487 BTC for $49.9 million at an average price of $102,557 per Bitcoin, raising its total holdings to 641,692 BTC worth $47.5 billion. The purchase, disclosed via X and an SEC filing, continues the firm's steady accumulation strategy. Despite recent purchases above $100,000, strategy's long-term average remains at $74,079 per BTC. Saylor reported a 26.1% BTC yield for 2025, highlighting the firm's profitable Treasury approach, which helped deliver a $2.8 billion Q3 profit driven by Bitcoin appreciation. BitMine Immersion Technologies, led by Fundstrat's Thomas Lee, bought 110,288 Ether during last week's market dip, spending nearly $400 million. The purchase increased its total Ethereum holdings to over 3.5 million tokens, or roughly 2.9% of the total supply. Despite a 30% fall in its stock price since October, BitMine's treasury now totals $13.2 billion, second only to Michael Saylor's strategy. Lee said the firm bought 34% more Ether than last week, using the dip as a buying opportunity to expand long-term digital asset reserves. Vivek Ramaswamy Strive has purchased 1,567 BTC worth $162 million at an average price of $103,315, bringing its total to 7,525 BTC. This puts Strive ahead of Galaxy Digital, which holds 6,894 BTC, according to Bitcoin Treasury's net. The purchase follows the oversubscribed listing of Strive's SATA preferred stock on Nasdaq, funding its Bitcoin accumulation strategy. Strive now ranks among the top 15 global corporate Bitcoin holders, reinforcing Ramaswamy's vision of BTC as a long-term reserve asset and showcasing growing institutional confidence in digital currencies. The US Internal Revenue Service has issued new guidance allowing crypto exchange-traded products to stake digital assets without losing the tax-exempt trust status. Treasury Secretary Scott Bessent said the move boosts innovation and investor benefits, aligning with President Trump's crypto vision. Consensus Counsel Bill Hughes adds that the update removes legal barriers for regulated funds, enabling them to stake on behalf of investors. The clarification follows the SEC's earlier statement confirming that staking doesn't violate securities laws. Layer 1 blockchain Monad has revealed its tokenomics as it prepares for the Mon token airdrop and mainnet launch on November 24th. The Monad Foundation announced a public sale of 7.5% of Mon's initial supply on Coinbase's token sales platform on November 17, priced at $0.025 per token, followed by a 3.3% airdrop. At launch, around 10.8 billion Mon will circulate, representing 10.8% of total supply. The foundation said its distribution model promotes long-term participation, with most tokens under vesting schedules to align incentives and gradually decentralize the ecosystem. The Bank of England has confirmed plans to impose temporary stablecoin holding limit as part of its new regulatory framework. The proposal restricts individuals to around $26,300 per coin and businesses to £10 million. The BOE said limits will be lifted once the financial system adapts to stablecoin integration. Some industry groups criticize the plan as overly strict compared to US and European Union rules. However, officials argue the measures are needed to prevent risk to the banking sector while encouraging stablecoins' long-term role in digital payments. Financial services giant BNY predicts that stablecoins and tokenized cash could grow to $3.6 trillion by 2030. In its new report, BNY said stablecoins alone could reach a $1.5 trillion market cap, with tokenized deposits and money market funds making up the rest. The report highlighted the digital cash equivalents can reduce settlement times and improve liquidity. Regulation remains key, with global progress under the European Union's MiCA and US policy work expected to support institutional adoption. BNY's Caroline Weinberg said the shift could transform global capital markets. Block Incorporation Square has launched Bitcoin payment support for over 4 million merchants globally, offering zero-fee transaction through 2027. Announced by CEO Jack Dorsey, the update allows sellers to receive payments in BTC or fiat via the Square dashboard. Merchants can choose BTC to BTC, fiat to BTC, or other combinations for settlement. Industry leaders say the move brings Bitcoin further into mainstream commerce. With Bitcoin trading around $105,000, the rollout reflects growing confidence in crypto's role in global payments and Dorsey's long-term vision of Bitcoin as digital money. Crypto wallet firm Exodus is acquiring Uruguay-based Grateful to expand stablecoin payment solutions across Latin America. Grateful enables merchants to accept stablecoins through QR-based checkouts, wallet-to-wallet payments, and on-chain invoicing. Exodus CEO JP Richardson said the deal targets small businesses and gig workers seeking faster, cheaper payments. The acquisition aligns with rising global demand for stablecoin transactions, now projected to exceed $1 trillion annually by 2030. Exodus will integrate Grateful's tools into its self-custodial wallet supporting Solana and Arbitrum networks. Australia's Propanc Biopharma has secured up to $100 million from Hexton Capital to build a crypto treasury supporting its cancer treatment research. The private placement includes $1 million upfront and $99 million over 12 months. CEO James said the move strengthens these firms' balance sheet and funds trials for its lead therapy, PRP, set for human testing in 2026. Hexton clients invest across Bitcoin, Ethereum, Solana, and Injective. Propanc joins a growing list of Biotech firms adopting crypto treasuries to attract investors. Well, that's all in this bulletin for now. This is Mirchi Sharma signing off. Keep watching 3 TV.